Everybody, what's up? What's happening? What's crapping in the world of finance? Looks like we're getting a little pullback this morning. Maybe, maybe. A little bit of lightning. Bitcoin taking a little jump back. Yes, take a little jump back. What is going on out there, right? I don't know. It's a big, nasty candle on the 15-minute. Big, nasty candle. We don't usually start with charts, but look at that. Uh-oh. Uh-oh. Something turned sour grapes all of a sudden, right? NASDAQ. Guess what? We hit our head on the top. I've been warning about a potential pullback. Looks like all the others so far. I guess we'll see how bad this gets. I mean, just pop over to this chart, jump over to this chart, and we can see I drew some arrows on here. I was warning about that 200 or 300 point, 1 to 200 point, maybe even a 300 point pullback. I mean, it's not rocket science, right? We hit our head. 1, 2, 3, 4. This will be the 5th time. Right in that zone. Pullback. I mean, if you're completely surprised, let's see. Let's start a poll. Right there. Hey, Kimberly's here. I see her in the chat. Wrong number. Sabina. Kathy, Dan. I'm trying to learn everybody. I see Svenborn. I see Frank. I see Sergio. I see David. I see one of the Davids. Rob, Craig. Let's see, we have Ted. I'm trying to learn the @ names. Aaron, good morning, everybody. So, anyway, let's try to open my other document for the 3rd time in a row. All right, let me switch back to this. I don't really have anything to show, and I look right at the screen when I'm kind of reading my notes here. So, I don't, it's not so fun for you to look at the notes. So, anyway, welcome everybody. And let's talk about the fact that we kind of set the poverty levels in 1968. And they haven't really been updated. I mean, we have these like yearly cost of living adjustments, COLA, to all these government numbers, but we kind of set like Social Security limits. We set all these things like back in the 60s and 70s. They haven't really been updated for current times. So when you actually look at it, I mean, the government numbers say that poverty level is like $30,000, $40,000, but is that the truth? If you reach $100,000, if you're pulling in 6 figures, congratulations, you've officially reached the benchmark for barely getting by, at least this year. Used to be the Joneses were making, just making 100,000. Now you're just hoping that the Joneses don't ask you to borrow a cup of sugar if you're making 100,000, or maybe a gallon of gasoline. I mean, I came across an article last night that perfectly captures the absurdity of our times. It lays out the brutal truth here. In America today, making $100,000 essentially can feel like poverty. It's not because you're bad with money. It's because the entire game has changed over the last 30 to 40 years. Maybe even longer. Maybe 50 years. Remember when 100 grand, I mean, most of us are young enough or old enough or whatever you might say to remember when 100 grand was big money. That number meant you had made it. You had a house, you had 2 cars, you had 2.5 kids. I'm not sure about the half kid, but the white picket fence. But now the white picket fence is probably part of a rental. The cars are on leases you can't really afford. You're thinking about renting out some of the kids to cover the grocery bills. I mean, the official government poverty line for a family of 4 right now is $31,000. That's kind of not a poverty line. That's a punchline. I mean, the median household income right now, median, like half of America makes more, half of America makes less. $83,000. I take 100 Americans. 50 of those make less than $83,000. 50 of those make more than $83,000. According to some pretty sharp analysts, if you adjust the original 1960s poverty metrics for how we live today and all the inflation and all the things that have come, the poverty level that they started with in the 60s when they set all these programs up would actually be $140,000 a year right now. That's the poverty level. Let that sink in a second. $140,000. That's not rich. That's the floor. That's the cost of admission to be reasonably stable right here in America in the 21st century, 2025. How do we get here? Let me tell you a story about this. It's the story of a 2-earner trap. All right, meet the Smiths. They're a nice family. Both parents work. They're trying to climb the ladder, right? Together they make a respectable, above median income. But to do that, they need somebody to watch the kids. Got to watch those 2.5 kids, especially that half kid. You're really in trouble with the half kid. And the average cost of childcare in this country has become so astronomically high. We're talking about $30,000 a year just to have somebody watch your kids. So the second earner is essentially working full time in a soul crushing job just to pay the person watching the kids, especially that half kid. Their net gain at the end of the month off that second worker, maybe $1,000. They're running in place, and the hamster wheel just keeps getting bigger, more expensive. It's not a personal failure. It's a systemic failure. Now, the author of the piece I read calls it the cost of participation. It's a cover charge to get into the club of modern society. And that cover charge goes up faster than any of our paychecks. So the hedonic lie in all of this is the idea that even though things cost more, they're better. So it all evens out, right? But it's kind of a lie. Think about it. Your phone bill. Back in 1955, a phone line, single line cost less than $5 a month. Adjusted for inflation, that should be about $58 today. But you can't run a family on a landline in 2025. You need a smartphone. You need data. You need broadband just to do your job and follow your half kid around. So the real participation cost for a phone is closer to $200 a month right now in 2025. That's 4 times the rate of inflation. Healthcare, well, that's just gone ridiculous. I mean, it should be about $115 a month in today's dollars based on where we were in 1955. Instead, the average family premium is over $1,600 a month for insurance. I mean, and you're afraid to use it because the deductible is $10,000. That's not really health insurance. It's a subscription to financial disaster. Cars, the median price for a car is over $50,000. The average new car loan was over $50,000 last month for a depreciating asset that you need to get so you can get to the job that barely pays for the car. When you add all this up, the taxes, the insurance, the childcare, the transportation, the cost of participation for a median family right now, it's about $50,000 a year with that median income at $83,000. And that's before you bought a single latte, went to the grocery store, paid for a vacation, or tried to save a single dime in a savings account or IRA. Now, most people, it's kind of terrifying. For us investors, it's a roadmap. When a system is this broken, it's potentially ripe for opportunity. So where do we put our money? First, the obvious inflation hedges. The government can print money, but they can't print gold, they can't print oil, they can't print land. Assets like commodities, precious metals, real estate investment trusts, these are critical. They're lifeboats in a sea of devaluing currency. And second, we invest in the crisis itself. Look at the pain points. That's where the growth is. Childcare, the cost is crushing, which means massive non-discretionary market. There's even emerging real estate funds like the CARE Fund that focuses, let's CARE, that focuses solely on properties that are childcare centers, after school centers. Those newborns got to go somewhere. And this new asset class is born from this social crisis. We have housing with rents taking up 30 to 50% of some people's income. Companies that own and manage rental properties, especially in affordable markets, they're in a powerful position right now. Look at real estate investment trusts that focus on multi-family residential housing in areas that are affordable markets. They're probably setting themselves up for decades of pretty good returns. If the average person can't afford a $50,000 car, where do they go? Used cars. Companies that service cars, companies that finance cars, companies that sell used cars, they've got a tailwind when cars are ridiculously expensive. And when the middle class feels poor, they shop poor. Discount retailers, that's why I've been big on Dollar General, Dollar Tree. Those charts are set to thrive in this environment. They're the new Main Street for a squeezed consumer. If you took the play yesterday I talked about on DLTR, selling puts, down there at the 98 area, 90, even down as low as 94, you came out today. You're probably going to be able to cash that win out. And then we have financials, the very banks that benefit from higher interest rates, which are a great response to this inflation. They're a direct play. Think of the big, boring banks that have been around forever. They know how to make money in this environment. They've seen it a time or two. Look, it's not that the American dream is dead. I mean, it's not dead. It's definitely behind a paywall. The rules have been changed. The idea that you can just work and do the same thing that people have done for decades in this country, save a little bit, kick back on that retirement, retire comfortably. It's a fairy tale of a bygone era. The new reality is a feast or famine type of world where you either understand how money can work for you or you become a victim of the system right here. The good news is we're savvy traders. We're not here to complain about the game. We're here to win from it and to map the winning, right? We see the headlines written on the wall, the economic despair, but we can turn that into profits if you pay attention. So be careful out there. Nobody's watching out for your money more than you are. So anyway, that's what I had to say about that today. I did the research a little bit. Hopefully you found a little value in that. It's get my words out. Words hard. All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money. I don't have a crystal ball. I got a bag of unicorn dust and a dumpster fire. It's probably clear because it's green. You got to be careful out there. Gotta be careful out there. Welcome to the show, everybody. Hopefully, you know, the good and the bad. Hopefully that wasn't horrible for you. It's a dose of reality, though, where we're sitting. That they spin this stuff on the media, and well, it's not exactly all champagne and roses, right? So we've hit our head. I keep talking about this. We've hit our head. How do we make money today? We've hit our head on this zone right here once, twice, 3, 4, 5 times, and that's really cool that the thing's lagging, so it's probably going to crash. Let's see if I can even remove it off the chart. Dun, 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 dun. Cool. What the heck is happening? 437. What the nuts is going on this computer? Hopefully it doesn't crash out. And did the computer just crash? Shit. Still here. Still here. Let's see, am I still live? It says I'm still live. Double check the stream. Somebody let me know if I'm still live. Something just crashed, like a whole bunch of stuff just crashed out on this computer. Thought it was gonna happen. Let's see. God love it, man. Going live. It says I'm still live. There we go. I think I'm catching back up. Everything went black. It actually gave me a login screen briefly. I was like, oh, dang. And then it put me right back in. I was like, that was weird. So, all right. We got you. There we go. Everything went black. I had nothing. And then it went to a login screen, and then it came back, and I was like, it ain't good. So, back to what we were talking about. One, two, three, four, 5, and we're kind of in this channel here. So watch out for this to break on down. If we do, probably taking a bigger trip down. So right now, support hanging out at 6,800. If we get below about 6,800, I could see us taking a trip on down into this vicinity. Let's see, where's the high? Right there. So 6,600. So I'm going to set an alert here. And the target's probably down on here, 6,650, maybe as low as 6,600. Right there. Now, you may see it as a bad thing, but if we pull back into next week's FOMC, that's actually an opportunity to pop. So we may see the market fleece out everybody, bum everybody out again through 2 o'clock right there. If we pull back from where we are here over to here, sets us up for a potential pop on FOMC. If we rally into that sets up for a potential drop. It's that kind of simple. If we just go sideways, it's a little bit of a coin flip. Flip the coin, baby. So that's where we're at right now for the next week. Yeah, that's week. Coming up next week. Dang. 1 week. 2 o'clock. Next week. Next Wednesday. Get ready. Get ready for it. Dun, 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 dun. So if we pull back, that's pop potential. If we rally, that's drop potential. If we go sideways, that's all bets are off. Not sure. We just churn in place. So same on NASDAQ here. I've been looking for NASDAQ to break above this high right here. It's been a little more clear on its path, but it is time for a pullback. We reached the target on the downside. We've come up to resistance on the upside. Now we need to prove that we have potential to go higher from here. That support zone would be right back down here. We tag that target, and let's see if we can get this one right. Now be careful playing this. Like we could just dip and rip right here. Right? If you're trying to play this into FOMC, be careful. There's no guarantees we're going to pull back here. Like we could just dip and continue higher and break out and then flush on FOMC. It's very possible. What fits with my outlook that I've kind of outlined for the last 2 months is that we would pull back here and then rally on and get new all-time highs going in the end of the year and first quarter of next year. But the market can do whatever it wants to do. Like it doesn't have to, I've been talking about that potential. Been talking about these potential pullbacks late in the quarter, in the last quarter, that sets us up for a rally into the new year, but doesn't have to happen. Doesn't have to happen indeed. The Russell just kind of churning here, coming back to the hourly roadmap line. We can hold it. I'd like to see it pop. So this is kind of the deal, right? You start out, you just work through. Like 30 minutes, we're already there. 1 hour, if we're going to continue lower, I want to see that hold. If it doesn't hold, look at the 4 hour. 4 hour, that's the next support. And if that doesn't hold, well, we could go back to the daily. That's on Russell. ES, look at the 30 minute. We're already there. Already poking through. The 1 hour, down here at 6,800. The 4 hour, down here at 67.75. Not far below the 1 hour. The daily, we didn't get there. Came up shy. We might have to go hit the daily. That would be down at 6,500 roughly. Be kind of sucky, but we might have to go down there. That would kind of fit with the market dashboard here. Stocks above the 20-day. We made another lower high. Stocks above the 50-day. Still needs a visit to the bottom. Still need that bottom. We were at the top back here in July. Still need to visit the bottom. Nice quick flush would set us up to rally. Stocks above the 200-day. Probably still on a climb rate. So a little hiccup on the 20-day and 50-day set us up for upside. So if we can get this one and this one to bottom out and support the rally, we could see this up here sometime early next year. That's probably what we're looking for in next year. So we may have a short-term downside and more upside. Got to make it through, though. Back to where we were. Oil, Still churning. I see the victory laps on social media about gasoline prices in 23 states. I think it was 23 states are below average, below $3 a gallon for the first time in 4.5 years. That's pretty big. Eases eases off the inflation, gives the Fed room to cut rates. And really, it's not good, bad, or ugly. It's probably not the Fed cutting rates that has anything to do with demand going down or inflation getting under control. Probably not the Fed raising rates. It's, you want to know what it probably is, it's probably tariffs destroying demand. Tariffs are, in 150 years of tariffs, they destroy demand. They don't cause higher prices. They destroy demand and cause lower demand and lower prices. That's what tariffs do. Now, we didn't have big tariffs all the way back. But once they started going into effect, pushes things down, slows down the economy by having high tariffs. It's the empirical data. It's not like all the economists are just wrong. The empirical data suggests higher tariffs destroy demand. Gold just churning right here, potentially a top. Be careful. That's an initial move down and a retrace. Can easily make another leg down. Silver finally hit the target. Look at that. Look at that mofo. Look at her go. We're actually hitting the target here. 73 next upside target. Talked about this being one of the biggest trades of this year. Hopefully you still got some. AGQ was the way. AGQ. If you missed out way back here when I said it was probably one of the biggest trades of the year, you're too late now. We did it. We hit the target. That was it. It's possible we go a little bit higher. Possible we go a lot bit higher. But the 75% likely move, the high probability move, it's done. We did it. Finished it. That was the entry right there. Here's the target. Finito bendito. But this stuff doesn't work, right? You guys are here. You know it works. So, start a poll. Bitcoin. So the initial part still playing out. We're still looking at this for this move up to this 94,000 area. That was the little bit higher time frame bounce. Let's see. Where we at? So this move from here to here, held on to that 618, popping up. Expect it to get on up to 94.7. Now, Bitcoin doesn't have the strongest history of this, but what we did hit is what we did run into, smacked our face into the 4-hour roadmap line right there. We're going to have to grind through this. We need to get on up to more ideal levels to turn this completely bullish. And what we have in place is a potential either A, B, C, if we stop here, or 1, 2, 3, if we stop up here on the next major kind of stopping point. So really what we need to see to turn this bullish is a move all the way up in here. Got to keep going. Need this level up in here to be bullish. If we break down below that low from Monday, crypto winter is probably here. That's 10 months. of declining price action, 30 to 40K is the target. If we, this is how important that low is from Monday. And really it's starting a downtrend, lower high or higher lows. And if we get below that, no bueno. Not good. So we need to stay on this climb rate. We need to stay above this stuff. Get up here, do a little consolidation, and keep going. New all-time high still possible, but we're going to have to thread the needle. Make a misstep. Crypto winter can take it over. Take this sucker down. So that's what I'm watching right now. On Bitcoin, Ethereum, kind of the riding the same style here, wild style. Coming up into the that little resistance zone. If we can get through it, need to get on up here. 3360 sets us up. You know, we're coming up into the 4-hour roadmap line right here too. So these are resistance zones. All right. This is, you know, everybody says, what time frame should I watch? All of them, depending on your time frame. This can show you right here that if we reject it, break lower than we did, than we had, you know, break lower low than Monday, probably kicking off crypto winter. That's how important it is. I mean, that just tips the odds. Does it have to happen? Does it have to be crypto winter if we break lower? No. But the signs are there. The signs are there. We came up shy of the targets on the upside. I still believe we can go up and hit them. But the signs are there that maybe we didn't get that high. So maybe there were too many believers that we were going higher. NKD still churning in here. Hasn't decided it's doing anything yet. Another pullback. If we can break on up through that 618 zone at 51,000. You can see 53, 54. If we break on back down, well, probably going a little lower, maybe back down in the mid 40s. On NKD. That's my global liquidity indicator. Dollar coming on down. We get below 98.5. Probably going back for a lower low than we had in September back here. Probably, you know, I was very cautious about this because of the overlapping nature of this. I was like, it just doesn't look bullish to me. Had this like little head and shoulders thing here to finish it up. And now we're breaking down below the neckline. Get down below 98.5. That's probably an indication we're going back down to lower low. Now, some people are like, how would you play that? You know, we have stuff like FXY, FXE, you have UUP, different ways you could play. Apple. Go, baby, go. 292, still the upside target on Apple. Amazon. So far, rejecting this breakout. First move down, retrace. Second move down. Puts us further down here. Potential for this to come down to the 190 area. Pretty violently here. There's potential for it to hold in here, but be careful. The only thing it really needs to do is make a lower low if we're going to finish. You know, we could potentially hold on to the bullish breakout of this downtrend of highs with a lower low and turn and rip this thing. So it doesn't have to hit that target. It's just based on doing this for a ton of years and seeing this kind of price action. It's the kind of thing we got. You know, that's a likely target. And that's exactly what Microsoft did. You know, we came back and retested the breakout. Talked about it for a long time. Now, look at that. Yesterday I was warning. I don't like the fact that we're not able to push through the roadmap line. And here we are back down here again. Gapping back down. Here's the low. Here's the high. We're at the 618. If we can hold on to this, potential to break back higher. Come up here, retest this 618. If we push on down, we're probably going back further down. Not going to hold the breakout. Probably going to do like Meta did and take a bigger, swifter step down. Google still has this upside potential at 337, but that could be it. We could come back and retest some of these support zones, like this one right here. Roadmap line coming up in there. This thing could churn for a couple months, end up just not performing for a little bit. That was a heck of a move right there. Heck of a move. That took a lot of energy to get 133% upside. It's due for a rest. Stocks just don't keep ripping. It's just not the way it works. Meta came down right to the support. ABC, perfect. This one can rip from here. We've got resistance coming up. Got the roadmap line right there. We've got this gap down we're going to have to break through. If we get through all this stuff, probably heading up here. And it could take a couple years to get up there. Could go fast. NVIDIA. Looking for this to hold the roadmap line. If we don't hold the roadmap line, we're probably coming on down. Retest the breakouts from last year. Those highs. Late last year. And this high in November, high in December, or right in January. December, January. Those highs right there. We're probably coming back to test those if we don't hold onto the roadmap line here. It's not big money down, but it is down. Right? It's down from 180 back down to about 150. Can we hold on to that? It's 30 bucks. 30 bucks times $25 billion. Whew. $750 billion evaporating out of the market. Going somewhere else. Tesla. Come on, baby. Push through. Push through. There's a big call wall. $100 million in calls for this month. Sitting at 450. Big call wall. If we can push through that call wall, probably getting on up here 480, maybe up to the 550 target. This one has been underperforming this year. NASDAQ, all these other Mag 7s, all blasting out. This one made its high back here and hadn't been performing. We should be up here if we were matching the performance of big tech. Netflix, well, here we go. Coming down for that $100 test. Anybody surprised? Only been talking about this for like 5 months. Probably coming back. Maybe as low as 98. If we can get it, then we can potentially do a bounce. And let's end the poll. About 50% of people got a piece of silver. Let's see. Do another poll. I know, wrong, you got your time frame wrong. I wasn't talking, this isn't for you, but I was just wondering if anybody bet against me and me talking about Netflix going to pull on back. I mean, we've only been outlining this since we made the high back here in June. So if you faded me on this whole drop, I lost money. If you thought we were going higher the whole time. Anyway. Let's look at things moving. I go pull gainers. Things moving $2 more up in the pre-market. Take a look at them. I'm pull things moving $2 or more down in the pre-market, decliners, and look at them. Usually there's opportunities in the decliners. And then I also bring some setups. There's like 14 of those today that are set up for an entry today with my signature roadmap bounce pattern. So stick around. We'll get to all the list here. And if you got to go do something, you can always come back and catch the end of the stream later on. So Marvell, still potentially a B wave here. I would be very cautious. This looks like an A, B. That's not bullish price action so far. It's kind of overlapping. Stalling out in this zone can easily lead to another secondary drop here. So it's still sitting here as a potential. Where would I be kind of confident we're going to bounce higher? It gets a little tricky. Gets a little tricky. See, we haven't hit the monthly. That might be what we're going to do. See, we hit it back here, came close here, and we hit the target, and we hit an extension. We might need to visit that monthly target or monthly roadmap line again. Now, it could just be a weekly bounce, but it's kind of sloppy. So there's potential to come on up here, 146. Just don't feel strongly about it. Don't like the way this price action is kind of three-wave. Doesn't mean it won't. In fact, if we get above, let's say 104, 105, let's call it 105, it's probably going to go on up to 145. If we get a daily close above 105, we'll probably go on up to 145. SMX. Reverse splits galore. Look at this nasty thing. Dumpster fire. Don't trade stuff like that. Garbage. Garbage chart. Company can't manage its stock. ALB. Look at that rejection. That's no bueno right there. No good. Need to hold this. Otherwise, we could go on a deeper trip down the lane. App 11. Oh, look at that. Set up for a 792. That beautiful ABC right in the roadmap line. 792 upside target. It is active. It has activated that target. That's beautiful. Beautiful. Let's call it 785. 785. 85. Time frame could take a little while. 7 months for the 99.7 percentile. Coinbase. Can we hold it? Is this the big indication that crypto is going to rip? Resistance coming up at the roadmap line and the 618. If we can clear both those, set the runway 485, 525. Connell is a way you could play. CONL. 2x leverage without buying options. You know, App 11. App it, you know, let's see, Apple. There it is, APPX. So if you wanted to buy something and take advantage of App 11 potentially booming out of there, APPX. Looks pretty strong. MSTR. Now this is a second one. Is this confirming the bottom? I put a little position on MSTX, thinking that, yeah, we're actually going to bounce on Bitcoin. LEU, sitting here on the roadmap line. Going to have to get back above the 352 to indicate we're going on up to 500. Snow has potential. First move down. Look at that, got the target. It's not magic, just, I don't predict predict time very well all the time. Had the target up here for since we made the lows back, but late last year. I bought down here, added in here, closed the ad here, still got the original 1 share buy. We hit the target, pulled back, probably going to do another pullback down, retest that, retest this, maybe this, before we go higher. Wow. This one just keeps going, man. This has been, if you can find these, so I pointed this one out back, gosh, when was it? Back here in June, July. I pointed it out that it was making a new 52-week high after a 3 to 6 month consolidation. If you can find these that consolidate for 3 to 6 months and then break out with a 52-week high, they tend to outperform the S&P 500 by 30% for the next 6 to 12 months. It's a monster. So if anybody got that, like, congratulations. Like, that was an awesome play right there. I didn't grab it, but I mean, I should have, but I was too focused on what other things I was doing. I mean, it's hard to argue that I'm doing it wrong with a chart like this. Yeah, it looks kind of like the light chart, right? I mean, that's my profit. That's what this is. This is the profit. You'd be like, where's the drawdowns? Here they are. Not many of them. They don't even show up in this. So that's how you do it. Consistent gains. Try to do it every day. Right now, sitting on $38,000 year to date. Since I started, I only started this April 12th right here. So if you can go after stuff like this, historic outperformers, and that's got 3 decades, 30 years of backtesting, backing that up, that if you can find stuff that consolidates for 3 to 6 months, it makes a new 52-week high, it will outperform the S&P on average 30% for 6 to 12 months. So 52-week highs are, you know, a lot of money's been made trading that stuff. SCCO did a split. And we're hitting our head. Watch out for a pullback on Southern Copper. FCX is probably the bigger opportunity in this sector. We're breaking out. It's time to go, baby. I need to add a position on that. Somebody in Termite Trading Lab remind me to figure out what I'm going to do later. Just need one. I don't need 100 people telling me. My copywriter asked me last night what I was going to do on copper. VRT, first move down, retrace, probably going to come down further. Watch out for that. Even though I've been talking about VRT for a little bit, it did hit upside. We did retrace. So this is the quandary, right? We've retraced the breakout right here. Is that good enough and we break on higher? Or do we get the third move down for a deeper retrace? See, I don't know. Like, without hitting the roadmap line and give me confidence that we're going to bounce, like, I don't. You know, it could be a 4-hour bounce, or, you know, it definitely was a 4-hour bounce. But it didn't close a candle above the 618. Doesn't look like. Yeah. Let's turn on the algorithm. Oh, it did. Did trigger an entry, so there's a 75% chance that we're going to get that continuation. But that doesn't negate it coming back down to the bottom. We could even make a lower low and then still come up here. So $1 below the low is the stop, though. 140, be roughly 148 right now. That one hit the target. Oh no, it didn't. It came close. 92. Logi, probably getting a bigger pullback. Needs to hit the roadmap line. Let's turn that off for a minute. Circle. That may have been the low right there. I'm staying on it. Like, I've got my position, staying on it. CRCA is my weapon of choice. I did double down. I am underwater. My cost is up here at 10. I have 200 shares. AMD. Still looks like we're hunting that retest right there. Uber. If we can get back through this 618, set up the upside 105. There. Right there, right there. Alma still ripping. Look at that. COHR. Back to the roadmap line. I don't know if Kimberly's still here, but she'd get a kick out of that Alma. MPLT. What is this? Biotech. Pharma. Leave it alone. Good. So be careful on hood. This is my big warning here. Danger, danger, danger. We have a resistance right here. And if we turn down, we'll do potential another step down. Here's the high, here's the low, there's the 618. Be careful right there. If we reject this, that's the target. Microchip. That was a beautiful, beautiful, beautiful move. All right. That low, that high. Low, high, low. High, low. So here's the resistance. Right on the, right there. We clear that 83 may prove to be a resistance. We may bounce off of that slightly. But the bigger target is right up here. I actually might sell puts on this. Let's see. What's the beta? 2. Oh, juicy, juicy. I might get on this one. I really like that potential. Could take a while. I really, really, really like this. And okay. I'm just gonna send myself a note in Discord. Oh, cool. Discord crashed. Exit pool. Good. Most of you didn't lose money and fade me. All right. Oops. That was supposed to be a poll, not a... Click the wrong button. And... let's try a poll. There we go. Remember, the polls are anonymous, so you can tell me I'm full of crap if you want to on a poll. BMR. If it's going to hold on, break back above this up here, we can see this outperforming again. Decliners, Argin, maybe coming back for the roadmap line. That's our pharmaceutical. PTSG. See, this is the exact pattern I warned about right there. That's it. That is it. Look at this. See that high, see that low, missed the roadmap line, came up at that resistance. So always what I'm leery about. And then right down to it, lower low. Ding, 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 ding. And we're in the point where we could bottom. We're at the vicinity where we could bottom. Trying to highlight some opportunities today because I feel like there's some opportunities here. CRWD. This could pop on up here. Does not have to retrace the roadmap line. Again, Ukta. Shoik. Well, got the target and then reject. Look at that. Hit that target and then nothing but down. Right back down to the bottom of the consolidation. It's probably where it's going. GitLab. Well, as briefed, it's probably going lower. And no bottom in sight for that one. ALB. We still have the resistance up here at 150. Watch for a pullback off of that 150. If we push on through, great. We can set up the bigger upside. Still have big upside up here, but 150 is the resistance to getting that bigger upside. Wayfair never has what I need. Coming up on 618 resistance. Watch out. That's a lower low. That's a downtrend. It's a pullback. Continuation can be down. SDNK. Watch for that to return to the roadmap line. Box. Nothing for years. Baba still needs. Still, it would look best if we can just tap that roadmap line and set up the bounce. And short Bitcoin warned about this. If we drop a little bit more, Bitcoin goes higher, this thing go make new lows. All right, stuff set up for potential entry today. Let's check it out. Here's the high. Here's the low. Entry, 38.96. Target. Statistics on this baby. None. CLH. Another nice one right there. Let's see. There's the high. Here's the low. Entry, 255. No statistics. Doesn't matter. Estee Lauder. Entry, 107 target. I talked about this a few days ago. The bounce potential here. That one was setting up. Doesn't have any history of doing this bounce though. Oh wait. Maybe I should reset the chart. So it gives me the actual. Yeah, nothing there on B. That one, nothing. Estee Lauder. Yeah. I don't know. You'd have to make your choice, right? I'm not keen on 60% success rate, but profit factor is 1.2, which is standard, so might work. INSE. There's the high, here's the low, there's the entry, 1040. Low price stuff and not great numbers. LSCC. Lima Sierra Charlie. Entry 78.74, 31.77. Negative profit factor. I'd probably skip it. MXL. That means the losses eat up the gains on it. Anything under 1. Entry 20.98. Dang. Look at these numbers. Whew. But only 11. This one has potential. It would be so if you wanted to do something like this one right here, this would be a lower, I would put lower amount of money on it than I normally would, because you're kind of gambling on the trend maintaining, showing promising upside returns, but at the same time, it doesn't actually have the history that supports it. It's kind of like, I watched the guy flip a coin 11 times. You know, you think about it. I watched the guy flip a coin 11 times in a row. Always got heads. I think I'll bet on him keeping get heads, right? But when you flip a coin, what are the odds? 50-50, right? 50-50. We all know it. So what are the odds here? The odds are 75%. Until this number is above 30. Greater than 30, then these matter. I should do a video on that. What do you think? Let me know in the chat. Should I do a video on statistics for traders? Did you find that helpful? Would you watch it? Depends. I guess we could do a poll tomorrow. Entry right there, 138 target. PDFS. Looking at tool down here. There's the high, here's the low, there's the entry, and 31 targets. PLAB. Here's the high, here's the low, there's the entry. 26.45 targets. Reasonable. Here's the high. Cool. High, low, entry, 155.84. Ring, high. Well, it got into it back here, but we have a secondary potential entry cooking here with 33. R. What did the pirates say? What's the pirate's favorite letter? R. Target 65.62. No statistics. SOXL. Here's the high, here's the low, there's the entry, 55.54, 12.83. And then UAL. This is probably, my target on UAL is up in the hundreds. 130. I guess we're at 100 now. I was playing with this back here in the 70s. And 114, 117. And we're set on the bigger 130, 140. Oh, looks pretty sweet. Even though the statistics aren't great. That has a bigger potential uptrend cooking. That's the list. So be careful on the downside today. We want to see that hold. At 6,800 test. And be careful out there. I'll be on Market Masters 11:30 with Jack. And I'll be back again tomorrow. Same bat time, same bat channel. 9:15 tomorrow. We'll hunt for opportunity once again. Be safe out there. Nobody's watching out for your account more than you are. It doesn't matter to anybody more than you. So be careful. See you tomorrow. Bye for now.